The cryptocurrency Dash is trying to follow Bitcoin in its monumental rise and has utterly failed. Stick around and I'll show it to you. Hi, this is Tim from TradingStrategyGuides.com. Today we'll look at a trading range on the cryptocurrency Dash. We'll look at that, but first we're going to take a look at some active trades and Tim's trading maxim. Happy Monday. Let's take a look at the active trades. Move my stop up to 12,297.46 on Bitcoin, locking in 14.56 per coin. That's nice. Nice push up, made a new high right here on Sunday's bar. It's pulling back a little bit, but that's okay. It's pushed up higher than this huge bar right here. Well, Royal Caribbean was disappointing. Got a close right here back inside the bear flag. Shut that sucker down at 63.39 for a loss of $278 per contract and an account loss of 1% on this particular trade. You win some, you lose some. It's just part of the job, right? The Australian dollar, Swiss franc, put in this pause bar right here on Friday. There's not a whole lot of indication on direction except that it was pushing up and now it's pausing, so hopefully that was just a breather and it's going to go down in our direction once again. We'll see. We've got some profit on this one, so either way we're good. Mankind Corporation gapped up right here from this close to this open right here. That was on Friday's bar, and that was above our original triangle here at $2.12. I took that as a sign that I should redraw this triangle, so I moved the resistance up to 215. So the new plan is to buy a candle close above 215. And that's all the active trades for today. Let's take a look at today's trade pick. Today we're looking at this trading range on the cryptocurrency Dash. I want to point out this noble attempt right here to follow Bitcoin and look at the volume behind this move. Now, I drilled down to shorter time frames and I realized that most of this volume was in an attempt to push it up, but it still got stalled right here at this level, and then it stalled 3 more days after that at that level. So if you've been around the block for a while, you already know that candle wicks represent price rejection and big wicks like this represent violent price rejection. But every time it hits the level, it's eating away at sell orders and eventually it's going to break through that. And just to be sure that everybody's on the same page, trading range is a consolidation with a strong support level like this one at 63.77 and a strong resistance level like this one up at 80.26. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I will take a break at the trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility. Right down here, volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. I'd like to point out that this is a hiccup, an anomaly right here. The volume has been declining, then it did that hiccup thing, and then the volume continued on its decline right here. We got the same thing with the volatility. So here's our trade plan. We're going to buy a daily candle close above the range or above 80.26, or we will sell a daily candle close below the range or below 63.77. On the breaking candle, we want to see this volume bar reach up to this volume average. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average. You should get at least 0.75. If you don't get at least that much, I suggest that you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. So let's say this finally gets up here. It breaks through. It's about to close above the range, just ahead of the close, say 15 minutes or 30 minutes. Set up your buy order. Look down here at the ATR, multiply it by 1.5. Measure that distance behind it for your stop loss. Measure 1 ATR ahead of it for your first target. And of course, just the opposite if it closes below the range. After entering the trade, if we get a close back inside the range, we'll take our loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using 2 positions. First position has a stop loss and a take profit and will close automatically when the first target is hit. Second position will only have a stop loss and that will be allowed to run. When the first target is hit, move the stop loss to break even on the second position. I will only risk 2% of my account on each trade. And that's today's setup on the Cryptocurrency Dash. This is how I manage these trades. You do you, boo. Make sure you understand what you're comfortable with and trade it that way. I use trading maxims to help keep myself in line. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 3. Never bet the farm. You should never allow any one trade to make you or break you. For those of you unfamiliar with the phrase bet the farm, it means you don't risk your livelihood on any one trade. You never go all in. If you want to be a successful trader, you need to maintain your risk parameters. Your main job is to protect your trading account, and betting it all on one roll of the dice is not that. Everyone wants the big win, but long-term success is based on lots of small wins and occasionally being in a position for a big win. That's how it's done. Remember our Cryptocurrency Dash trade plan for today? We're going to buy a daily candle close above the range or above 80.26, or we'll sell a daily candle close below the range or below 63.77. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And you'll find a link in the description to the trade management video if you need more details. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box. Also, don't miss the Dream Trades segment on Wednesday's videos. Click the link below to find out more about Dream Trades. Come back Wednesday for the next installment of the Trading Education series. This time we're going to talk about trend analysis. Be here Friday for my strategy of the week and next Monday for my trade pick video. Our videos all come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you on Wednesday.